Hi, everybody. This is Dan Sheridan, and I'm going to be talking about a little bit vertical spreads and iron condors. Market is pretty crazy, and here's an example of a vertical credit spread. You can see when you're in a VIX environment that is up here 24, 25 level today, what does that mean for you as a retail trader? Here I'm going out, selling a 50-80 put, AUG 30, about 22 days out, with the SPX at 53.16. So that takes me about 240 points out of the money from my short strike. And so one of the advantages in a higher volatility environment is that you get a lot more room on your short strike. And the other advantage is your deltas are a little bit less, so you have less exposure if it goes against you. Here, selling the 50-80 put, buying the 50-70 put, getting almost the market's changing, but close to $1.40 credit, and I'm only 0.74 deltas long. And so there's definitely some advantages when the market is crazy. And when you look at a chart here, this is crazy. I've never seen in the last, in a 3-week period, more days where we've had 100-point ranges from high to low. And you say, well, doesn't that make it for some type of range-bound trading? Does that make it tougher? It does, but what helps is as long as you're getting, for a range-bound trader, the number one thing you want is some two-way, which we're getting now, some two-way movement. But the other thing with volatility up much higher than the top of the range for most of the year, which has been maybe 18, 19, you get a lot more room. So it's like an SUV handling with all-wheel drive, handling 12 inches of snow. It's not a big deal. So this coming Saturday, which would be 2 days, the 10th, at 11 Eastern, for an hour and a half, I'm going to start my volatility series on some of the more popular strategies. This Saturday, I'm going to do credit spreads and iron condors. The next Friday, during lunchtime, and they'll all be recorded, I will do the butterflies, and then I think I'll skip a week and then do calendars. But you can check us out at SheridanRiskManagement.com. But I think that'll be a help to you. If you have any questions, Dan at SheridanRiskManagement.com. And I think it's $297 for all 3 classes. They'll all be recorded. And the nice thing when we do something is, since I'm doing these classes, if you have any questions on the material, you can send me an email, even months after the class. Now, getting back to what we were talking about, here's an example of an iron condor. And you can see here, I'm selling in this example, the 50-20 put and the 56-10 call. And we're currently at 53.07. So you're getting like 280 points from the current price to the short put on the downside. And you're getting almost 300 points to the upside. So you get a lot of room, very low gamma. It just means the deltas go very little against you as you go up or down 2%. That's over 100 points in the SPX. And this one is, and I don't normally go out to like, here's September 13, maybe 36 days, but because the volatility's up, even though your theta is lower, if the vols drop 2 or 3 more points, you can really get some good benefit because these are short vega. So in the volatile environment, since a lot of this volatility has happened the last week to 2 weeks, especially the last week, we've been doing mostly short vega type trades, butterflies, iron condors, and they've worked well, right? None of them have got hurt bad at all. They've done pretty good. And so I think that's a good start. We'll be starting with the short vega, iron condors, and vertical spreads this coming Saturday, August 10th at 11 Eastern. So you can come to Sheridan Risk Management. To sign up, we'll probably include a link on this video, and look forward to working with you. Thank you.